Hey, Ira Epstein with your metals market wrap-up, and this is for Tuesday, the 14th of April, 2020, about 3:25 p.m., and that is Central Time. Well, the gold down $10. Now, you're going to see a settlement that's higher than that because remember, at 12:30, settlement prices are determined even though the market trades until 4 o'clock. And that market's going to finish around the 1760s, high 1760s, so it's fallen back quite a bit. I don't know yesterday what was going on with this silver gold spread. Somebody moved it in a big way out and it came right back today. So it tells me that somebody was either unwinding of the spread or putting something on and really doing it with not a lot of abandon because the market came back into what I'll call a better line today. Copper down about 70 from where it's going to finish, and you're about $2 lower in the platinum. Dollar index down, and down hard today, 98.85, as the foreign currencies are waffling, but everything's giving ground to the massive stock market rally, and it's the best rally in the NASDAQ since December. So here we are 4 months later, the market's already made back half of its losses. Is it getting ahead of itself? I can't answer that. What the market is focused on is not earnings. We knew that was going to be the case. What it's focused on is the reopening of the U.S. and other world economies, and that is what this market's doing. So any news you're getting, it almost feels like January or February, because then it didn't matter if we had any bearish news at all. You were going up how many days, going for new all-time highs in the stock market up into February. Now the news can come out all at once about COVID-19, the virus. It doesn't seem to weigh on the marketplace. Hearing the AMC might declare bankruptcy, seeing the orders lost from Boeing, I can go on and on down the road. It's rear view stuff. The market's now looking forward. That you got to think about. In the gold, one of the things I mentioned to you yesterday, I'd be very careful about buying rallies. The pullbacks seem to offer better opportunity. And why? Because it gives up so much. Here's another one of those days. And I had just brought this up. I'd written in my market letter that when you get these $50 rallies, they don't seem to hold. And the market today, right now, you're $37 lower than the high of the day. So let's go to the chart. As you can see, we're up right now for the week. And we're going to finish a little stronger than this. It's only Tuesday, 5:30. And as I told you, the market's closed higher than that. When I come in and look at this chart, it still looks to me like an inverted head and shoulder chart. A shoulder, the head, another shoulder. And what you'd simply do with this is you pick it up at this side, you lay it over, and it gives you what a price objective would be. And as I told you yesterday, it could be the 1950 area. When I look at swing lines, the pattern is one of higher lows. And it didn't start here. This is the low that began from that one, but higher lows, higher highs. That's bullish. Where is the market in relation to the 18-day average of closes? It's over it, so the bias is up. How much is this average moving a day right now? That's another thing I look at. Well, we can see it's about $10 a day plus. So tomorrow, that number's probably going to be up closer to the 1655 or a little higher than that level. The point I'm making is 1670 could become an important number you don't want to take out on a correction. That's still from where you're at, $70 away. I'm just trying to figure out that I think by Thursday or so, the 18-day average will be near that number. What about where the market's getting up to? Well, you hit the Bollinger Band once here. You haven't hit it since then. The market made a run at it today, didn't get anywhere, but it's made a run at it the past 2 days. So we'll see what the market wants to do here. And in terms of momentum, I like what I'm seeing. The momentum, both numbers today are going to settle over the 80 level. Yesterday, they were both over. Let me get to this. Come on. Doing something not right here. Here we go. I want to come back. Both numbers for the gold market today are over the 80 level. Yesterday, both numbers in the gold were over the 80 level. On Thursday, they were both over the 80 level. That tells me we're embedded. Embedded occurs when the two numbers of the slow stochastic are either going sideways over 80 or sideways under 20. It locks in a trend until the red number gets back under, when the bull case, back under 80 or back over 30 in the bear case. And that tells me that on pullbacks, I think the trade is going to be looking to be buyers in this particular market. Now in the gold-silver ratio, this is what I want to take you back to. This is how the market looked coming in at the end of the day Thursday. Yesterday there was a monster move. That's a big move. You had finished out at 107.92 on Thursday. You went up 4 full ounces, 111.93, and you dropped it back to 108.17. That doesn't act like something other than somebody getting out of a position. I don't understand what it was. If the market can break through this 107 level, watch out. That could be an accelerant for the silver market. In the silver, you could see how it's just been coming up, and it too has developed an embedded reading. So now I'm starting to get interested in the markets. On the pullbacks, I think the trade is going to get even more aggressive than they've been, because I think the trade is smelling that there's the basing of currencies. The trade is smelling if things are going to get better. Think of the industrial metals. They should pick up if we eventually, we're talking right now like we are, of how do we open U.S. factories. Now, doctors are saying, no, it's not the time to open them on May 1st. Okay, so it's May 10th. Okay, it's May 15th. That's what the stock market's looking at. It's already looking there. In the metals, they're saying, but the governments are still trying to throw a lot of money at these markets, and we've already gone through some of these payments for the small business, and there's not enough money to go around. Metals smell that. That's all I'm telling you. When we look at the copper market, you're now not able to get back under that upper Bollinger Band. I'm sorry, I said that wrong. 233.80 is where the market's at. It closed a little higher than that, so I already know it's over it. Those are not bad signs, but unlike the silver or the gold, you're not embedded. You're just overbought. So this is a resistance zone of some significance right now. When we come to the platinum market, I'm not surprised the market went up here and sort of stalled out. We're very close to where the market actually finished. I think it was 819 when I was looking at it. So you're right in that zone. The first challenge of a Bollinger Band, you know what I teach. That is where I think the pros are taking some money off the table. What about the slow stochastics? Well, both numbers were over 80 today. This thing doesn't want... I don't know why it did that. I'll have to restart the computer. Sometimes you get in trouble with that. These are all wireless, and that's what you run into. Both numbers were over 80 on Monday and on Thursday. So you have your embedded readings. Therefore, these markets are in pretty good shape from the bull side. And even the palladium, while it's overbought and the market has got a reading with over 70 in these numbers, that's why I call it overbought, it's still holding this 100-day average. And what the market seems to be marking time to do is the 18 is very quietly making a move towards that 100. And if it crosses over it, you get a bull crossover. If you were to get an embedded reading with it, that could get quite powerful, and I'd be eyeing areas up here. Let's assume the market breaks down. I'm still going to look for support between the 100 and the 18-day average, close under both, and I'll go back to the drawing board. But right now, that's what I'm seeing. And in the dollar index, what's helping the metals is the dollar is broken down. Now, if the dollar continues to break, and it is oversold, this area could become important. The 100-day average and the lower Bollinger Band is certainly the 100-day average at 97.86. But an oversold condition often begets, if you will, corrections in the market. You're not even trying to embed just yet, so I'd be looking at that pretty hard. We'll be talking about this in our writings. What we do at the Linn Group is we put out a lot of emails for people. Our research just rocks and rolls all day long. And as it's coming out, you'll be getting your emails in your email box. You can go in our charting software, see what we write about, but it's all written by guys that have a lot of information in these markets. And I think that's what people have to look for. How much information? What's going on? Are they telling you anything that makes sense? We'll let you decide if you think that is the case with us. But we cover all these different sectors. It's yours to take a look at for free. For those of you that have a trading account or buy my research with us and the trading account with us, we include this free with certain of our subscriptions. Certainly all the trading accounts get it for free. How do you see what it is? Well, go to our website, sign up for the free offering. You'll see on the bottom right what the offerings are, and away you go there. You can click up here if you're watching me on YouTube, and we'll take it from that point. I'm Ira Epstein. You have a great day, and I will talk to you all, let's see, that'll be tomorrow afternoon, same subjects.